Many people were waiting before the weekend for confirmation of wouldn't they, and at what time, discuss trade over the weekend. And then those talks, it seems, were shelved, cancelled, at least for the short term. How concerned are you about that? Or does this just add to, many things we already knew about a tense geopolitical situation between China and the US?
Well, I'm not so concerned about the near term. And in a way, I mean, what are we doing really looking too much about the near term for the status of these relationships, of this relationship when you have a Trump administration that may be on its way out the door in just a few months. And I wonder if we'll see this dragging along with almost no developments really until we get to the other side of the election outcome. That in itself could be an exciting process this time around, more so than perhaps at any time in history. But if we have an entirely different administration dealing with the Chinese, I think I'm really not looking for decisive developments either way from this in the near term.
OK, and does that mean you don't expect any real movement in the yuan? There's a lot of conversation about the PBOC. It put liquidity into the markets, but could it do more? Could it cut interest rates? Does that the yuan is partially managed, of course. So what are your expectations for the Chinese currency as we head, crucially, to November?
Yeah, I really don't have any expectations. I think it's a big relief for China that the dollar has remained relatively weak, and it has allowed the yuan to more or less track the dollar to the weak side. We're seeing that in the basket as well, where it's trading at the lower end of what that basket was defined at some years back. So, China certainly trying to avoid making any strong statement either way with where it is managing the yuan at this point in time. What hurts China the most would be a dollar that's heading back to the strong side, and the U.S. administration somehow weaponizing the dollar or the financial system. We've had the Fed providing all the liquidity to keep that from happening. But of course, this is going to be a massive focus on the other side of the election and going forward, both the weaponization of the U.S. financial system and the ongoing disengagement of these two economies, which I suspect, regardless of which administration we see, will be this sort of ongoing process.
That political weaponization of the US financial system that you talk about there, John, is that in the driving seat when it comes to the dollar, or is the dollar at the mercy of other factors? Goldman Sachs out this morning saying that they see the dollar falling further against G10 peers. What's your expectation?
Well, I don't think that's the focus right now for broadly speaking. It could be the focus specifically between the U.S. and China at some point down the road. The focus for dollar is on liquidity, is on what the Fed plans to do stimulus-wise. I think that's where the focus is. And it's a bit odd to me to see the dollar as weak as it has been, because you're not seeing the Fed's balance sheet expanding. It topped out the balance sheet in early June, and we see it for technical reasons, not linked to asset purchases, but other factors, actually shrinking since then and not really going anywhere. So this whole liquidity argument, at least in the near term, driving a dollar weakness, I'm not sure I see it right now. And in the meantime, we've developed a record speculative long in the euro versus the dollar in U.S. futures market. So I find that rather interesting. And again, scratch my head a bit to see why we should be trading much stronger on the euro dollar specifically, given liquidity, the lack of support from the liquidity narrative out there, and this positioning situation is rather interesting.